Hello, Profit Hackers. I'm Jeremy Lott, the Chief Visionary for Foundation Accounting and Consulting. I owned a construction company for about 15 years before making a change to accounting because my accountants sucked. My goals are to simplify accounting for construction company owners, fuel your profits, level up your cash flow, and help you grow in a financially responsible way. So let's go. Hello, Profit Hackers, and welcome to the Contractors Profit Hack Show. I'm Jeremy Lott, and we are back again today to talk a little bit more about the budgeting process. So last time when we met, we talked about your why and coming up with your why and being able to put a number to your why, right? Well, today we're going to talk a little bit more about that and how that applies. Let me start with a story. This story is about my little brother, Eric, who passed away from cancer 3 years ago. And I had the privilege of being able to coach him while he was in high school. I coached in high school wrestling for about 13 years and loved it. It was a ton of fun. And got the opportunity to coach my brother, Eric. Eric was so frustrating to coach. Eric was one of those type people that had all the talent in the world. He was super talented. He could pick things up and then do them. And when he did them, it was like the example you wanted to video and put on a how-to tape, because it always looked so pretty. Eric's problem was his mentality. Eric was very hit or miss on whether he was excited about winning or not. And so he had all the talent in the world to be able to win a state title. And he probably should have been at least a 3-time champion, if not more. But he just didn't care that much. He loved competing. He loved winning. But when it came down to whether he had to sacrifice time with his friends or, whether he had to focus really hard to win a match, it wasn't always there. It was very hit and miss. Like I said, he was very talented, so he won most of his matches. But his junior year, he was in the state tournament, and I was coaching him in the state tournament. And he'd had a really good year. I don't remember what his record was or anything, but he'd had a really good year that year and was really dominating. And I believe he was ranked first in state at his weight. And he wrestled his first 3 matches and won them all, which, if you are familiar with the 16-man bracket, 4 matches is what you need to win in order to win the tournament. And so he'd won 3, and he was now going to be in the finals. The finals were the next day. And that night, there was an article posted in the newspaper about a kid named Sean Kiwajima from Hillcrest High School. He was a senior, and he was their quarterback. And he was facing Eric in the state finals. Well, the article went on and on about what a great athlete Sean was and how he was so dominant in wrestling and how he was going to win the state championship. Well, that really lit a fire under my brother. And he decided that that was not going to happen. So the finals match came around, and he was super hyped this time. And as I mentioned before, he had all the talent in the world. So when you could combine that with that kind of hype and determination, it's not good for the other person. And he killed John Kiwajima. It was no contest. And my brother looked very, very good and won a state championship title. And that was super exciting. So much fun. And the reason that I bring that up is because it's important what you focus on. Some things just aren't as important to us as other things. For instance, lots of people love to talk about the amount of revenue that they make in their company. But frankly, revenue doesn't matter. It's very important because it gets you to the amount of profit that you make from your company, but it doesn't determine how much profit that you make in your company, right? And that profit is what's the most important for us. We want to be able to put money in our pockets, not just deposit it in our bank account, right? And so it's super important in your business to go back to that why and focus on that why and what is your why, and then assign a value to that why, right? Well, when you assign a value to that why, then you can start creating a budget all based around that amount. So for instance, let's say that you go through and have some different goals. You want to be able to put some money away for your kids' college. You want to be able to pay off some credit card debt. You want to be able to save up a certain amount for a down payment on a future home. You want to pay off a car, and any of these kind of things, right? And you add them all up, and your total is $200,000. That's the total for that why, right? Well, now we can take that why and we can reverse engineer how much revenue you actually need based on our cost analysis from earlier. So if you'll remember correctly, the costs to do something are always a percentage of your revenue. So if I need 200,000 and I have a 30% gross profit margin, what I need to do is I need to take all of my bills and expenses that go in the hill, my fixed selling, general, and admin expenses, and add that 200,000 to them. So if I was at 300,000 for my selling, general, and admin expenses, my hill, I would add the 200,000 to that, which would then give me 500,000, right? So the size of the hill that I have to go over is 500,000. That's the total that I'm shooting for, right? And then we back up again, and 30% is the gross profit margin, because 70% of every dollar goes toward the cost to do that work, right? I know it's getting confusing here. We're going to slow it down a little bit. The number that we want to focus on is that 30% gross profit margin and the hill of 500,000. Well, I think I've explained this before, but when it comes to a break even, it's no different than the miles per hour calculation to figure out how long it's going to take you to get somewhere, right? So if the distance we want to travel is 100 miles and we are going to go 50 miles per hour the whole way to get there, then how long does it take to cover that 100 miles? Well, that's simple, right? You take the 100 miles that have to be traveled, the distance, and you divide it by the rate, which is 50 miles per hour, and the end result is 2 hours. It's going to take me 2 hours at 50 miles per hour to go 100 miles. The opposite is true as well. If I only need to go 25 miles, but I'm still going 50 miles per hour, I still am going to take the distance of 25 miles and divide it by our rate, which is the 50 miles per hour. Well, 25 divided by 50 is 1/2. So it's 1/2 hour to make it to our destination, right? So all that's pretty simple. That's third grade math, not super complicated. All we're doing is some simple division there, right? So we're going to do the exact same thing with our previous scenario. So our hill size was 500,000. That is the distance that we have to travel, that 500,000. The rate that we're going over that hill is the gross margin, which is the 30 cents for every dollar, right? So all we have to do then is take our distance of 500,000 and divide it by our rate of 30%, and that gives us 1.5 million, right? So at 1.5 million in revenue, we cover our costs of 70%. Then we cover our hill of 300,000, and we have 200,000 left over as profit. So that's how we back into the revenue that we need to figure into our budget. Then we can just take that 1.5 million and divide it up among our active months. Say we're only active 8 months out of the year, right? You take that 1.5 million, divide that by 8, and that tells you how much money you need to bring in sales each of those 8 months throughout the year, right? So once we have that revenue, we can jump into some of the other items that go into a budget and help us be able to figure out where all those dollars are going to go, right? So again, we've been talking about budget. We talked a little bit about why and what we need to focus on. And then now we've talked about our net profit, and that the thing that we need to focus on is our net profit, not our revenue. Just like my brother needed to focus on winning that one match rather than taking state, right? And then after that, we can figure out our break-even revenue so that we know the number that we have to budget on to meet that goal. So this is Jeremy with Foundation Accounting and Consulting, and I will talk to you again next time. Thanks for listening. If you found this episode helpful, please like and subscribe for weekly episodes to help you fuel your profit, level up your cash flow, and finance your growth. Until next time, go enjoy some green M&Ms and protect that cash.